$349 billion. That's the current real-world asset value sitting on the Canton network as of today. To put that in perspective, that is roughly 23 times the size of its closest competitor. Yet, Canto token is trading at just 16 cents. Most people look at a chart and see a standard ascending wedge. They see a potential breakdown. But when I look at the institutional flows, specifically the massive equity play happening on the Nasdaq today, I see a disconnect that usually offers a very specific type of opportunity. We are looking at a market monopoly that is currently priced like a speculative startup. But, and this is the critical part, the technicals are flashing a warning sign that we cannot ignore. If we lose one specific level, this entire thesis invalidates. I'm going to show you exactly how I'm playing this. We'll look at the on-chain burn data that just hit a new record, the new equity ticker that BlackRock is buying, and the exact price levels where I'm entering and exiting this trade. Welcome back to Crypto Yield Pro. We need to start with the immediate context, because today is not a normal day for this asset. If you have been following the traditional markets, you know that today is the day Canton's equity arm, under the ticker CNTN, begins trading on the Nasdaq. Why does this matter for the token holder? Because for the last 6 months, we have seen a divergence. The price of Canton has been chopping in this 15 to 17 cent range, while the fundamental usage of the network has gone parabolic. I want you to pull up the daily chart in your mind, or look at the screen if you can. We have been tracking a very tight consolidation. Price is currently hovering right around 16 cents. We recently saw a rejection at the 618 Fibonacci level at 18 cents. Since then, it has been a battle to hold support. But yesterday, something changed in the market structure. We broke above a descending trend line that had been suppressing price for the last 2 weeks. This breakout coincided almost perfectly with the pre-market buzz surrounding the Nasdaq listing. The sentiment right now is cautious. Retail investors are bored. They want meme coins. They want volatility. They are ignoring infrastructure. But smart money is looking at yield and utility. And right now, Canton is effectively a gameplay in town for institutional settlement. However, we are sitting inside a massive ascending wedge pattern that formed late last year. Textbooks will tell you this is a bearish pattern. It usually breaks to the downside. But I'm betting on one final push higher before that decision is made. And I'm going to explain why the fundamentals suggest the bulls have one more round left in them. If you look at the RWA league table, Canton is not just leading, it's dominating. They hold 88% of the entire real-world asset market. The next closest chain is Provenance with less than 4%. Ethereum is sitting at 3.7%. This is not a competition, it is a monopoly. But here is the metric that actually matters for a yield-focused investor. It is not just total value locked. In DeFi, TVL is often a vanity metric. It just sits there. In Canton's case, that $349 billion is in daily repo turnover. That means the capital is moving. It's high-velocity money. Daily repo trade counts are up 34% in the last 30 days. This proves utility over speculation. This network is being used to settle trades for banks like Goldman Sachs, JP Morgan, and BNP Paribas every single day. Now, let's connect this to the news dropping today. The new Nasdaq ticker, CNTN. Why are institutions like BlackRock and ARK Invest buying the equity? Filings show BlackRock holds 2.2% and ARK holds almost 9% of the company. They are buying the stock because, regulatory-wise, they likely cannot hold the token directly yet. The equity is their proxy. This is institutional de-risking. They are betting on the infrastructure. But for us, the opportunity is the token. We also have the Polyglot update coming in Wave 2. This is the bridge. It makes Canton EVM compatible. Right now, all that massive liquidity is trapped in a private, permissioned layer. When Polyglot goes live, that capital can bridge into public DeFi. That is the liquidity event I am positioning for. Finally, look at the tokenomics. The burn-to-mint ratio has climbed to 0.6. It was near 0 last year. We are seeing a massive spike in burn activity starting in November. Canton is approaching a 1-to-1 equilibrium where the network burns as much as it mints. That is the definition of sound money mechanics kicking in. However, I must point out a risk. The supply chart shows a vertical step-up in issuance late in 2025. There was a large unlock. The market seems to have absorbed it as the price stabilized. But we must be aware that inflation events can suppress price action. Now, let's move to the chart. I'm looking at Canton on the daily time frame. The price is currently trading around 16 cents. Price was sandwiched between the 21 exponential moving average, the red line, and the 55, the purple line. The fact that we are now holding above both of these averages is the first sign of strength. As I mentioned, we are inside a large ascending wedge. Typically, when price squeezes into the apex of a wedge like this, volume drops and eventually gravity takes over. It breaks down. However, markets rarely make it that easy. Yesterday, we saw a breakout of a shorter-term white-dotted descending trendline. This was a key resistance level for the past 2 weeks. The price respected it, coiled, and popped. I also want you to look at the Heikin-Ashi Relative Strength Index at the bottom of the chart. It's currently in the neutral zone, right around 0, but pointing upward. More importantly, the indicator itself is respecting an ascending trendline dating back to the end of 2025. It just bounced off that support again. Momentum seems to be resetting for a move up. So here's my strategy. I entered a long position yesterday at 16 cents. This is a short to medium-term swing trade. My invalidation level is strict. If we get a daily candle close below 15 cents, I'm out. That 15-cent level is critical for 2 reasons. 1, it's a horizontal support zone. 2, it would mean probably losing the 55 EMA. If we lose the 55, the trend has shifted. If that happens, maybe because Bitcoin drops below 60,000 and drags the market down, I'll flip my bias immediately. I'll close the long and open a short position targeting 11 cents, which is the next major demand zone. I would use low or none leverage because the volatility could be high. But assuming the support holds, here are my upside targets. My first take profit, a small one, is at 18 cents. This aligns with the 618 fib retracement level, anchored from the high of 19 cents down to the low of 15. This is also where we faced rejection recently. If we clear 18, the next target is 20 cents, then 22 cents. This is the 1618 fib extension. This is a very common target for a Wave 3 impulse. Beyond that, if the Nasdaq listing creates a mania phase, we could see 26 cents and finally 30 cents. I'm using a trailing stop strategy here. If price hits 18 cents, I move my stop loss to my entry at 16. If it hits 20, I move my stop to 18. This guarantees that once the trade moves in my favor, I cannot lose capital. I'm locking in yield at every step. The risk-to-reward ratio on this setup is 3.77. That is mathematically a trade worth taking. We are risking 1 cent of downside for potentially 14 cents of upside. Now, let's zoom out and game plan the scenarios. The bull case is simple. The equity listing today brings mainstream media attention to Canton. The polyglot narrative catches fire, and people realize $349 billion is about to touch Ethereum-compatible DeFi. In this scenario, the ascending wedge breaks to the upside, which is rare but explosive. We clear 22 cents and head for all-time highs. The bear case is that this is a buy the rumor, sell the news event. The stock launches, the crypto market dumps, and Canton loses the 15-cent support. The ascending wedge plays out as a traditional bearish reversal. In that case, we do not argue with the market. We take the small loss, flip short, and write it down to 11 cents. This is why we wait for the daily close. Do not get shaken out by intraday wicks. We need confirmation. Currently, with the burn rate increasing and the institutional monopoly solidified, the probability leans slightly bullish for this last leg up, but we must remain agile. So, in my honest opinion, Canton Network is a fundamental giant trading like a mid-cap ghost town. The data shows clear institutional adoption, but the chart shows a market at a decision point. I'm betting on the breakout, but I'm protected by a tight invalidation. Remember, in this market, it's not about being right or wrong. It's about how much you make when you are right and how little you lose when you are wrong. That's the essence of yield. If you want to track this trade in real time, I post my updates daily. Join the free Telegram community. The link is in the pinned comment below. That's where I shared this entry yesterday before I even recorded this video. If you are interested in other real-world asset plays, check out my last video on Avalanche, where I break down their subnet strategy. None of this is financial advice. I'm just sharing my notes and some of my own plays. Much love for watching, keep your risk managed, and I'll see you soon in the next one.